Hola, amigos. What's with the bad curtains? I am in Mexico, specifically Cabo San Lucas. Why? I am surfing, but I want to get to know the local culture. So I'm going to a small Muslim house of worship. It's called a mosquito. Oh my God, so offensive to so many people. Because let's be honest, they don't make great decisions down here. Why? Because they are bordering on stupidity. That's right, that's right. Anyways, a loser, traditional IPOs, and the bankers behind them. For decades in Silicon Valley, the path to riches was completed by ringing the bell on the NYSE, signifying a successful public offering. IPOs, or initial public offerings, have become synonymous with instant wealth for company founders and the bankers brokering their deals. The first IPO in modern history, in 1602, the Dutch East India Company went public. The process of raising money and being traded on the stock market hasn't changed a great deal since then. In traditional IPOs, bankers underwrite the expected value of the company in exchange for a hefty fee. So hefty, in fact, that underwriting accounted for almost 20% of Goldman Sachs' revenue in the late 90s. Companies typically go public to raise capital that they can then use to boost growth. But some tech firms don't need a cash injection. They just need liquidity, a way for their founders, early employees, and investors to sell their shares. And that's where the direct listing comes in. In a direct listing, a company doesn't issue any new stock and therefore doesn't raise fresh capital. Instead, shareholders sell existing stock directly to the public, leaving investment banks out of the process. Until last week, there were only two direct listings on the New York Stock Exchange, Slack and Spotify. And then in a single day, it doubled when Palantir and Asana registered their direct listings. A successful direct listing saves the firm tens of millions of dollars in underwriting fees, which can vary but typically cost over 7% of the fresh capital raised. Slack was worth around $23 billion when it went public last year in a direct listing and paid $22 million in fees to 3 financial advisors. By comparison, Snap went public through a conventional IPO valued at $31 billion and paid $85 million in fees to 26 banks. In addition to saving on fees, there are really 2 reasons companies might pursue a direct listing. The first is underpricing, namely the difference between the offer price of an IPO and the closing stock price on the first day of trading. Because underwriting banks essentially purchase all of the stock at the point of the offering, they deliberately set the opening price low to make sure they're not left holding stock they can't sell, and also to please their most profitable institutional clients. To the founders, venture capitalists, and employees behind these companies, the surge in price on day one of trading is a missed opportunity, as they often are restricted from selling their shares until 6 months after the IPO, and they also incur a dilution which, quite frankly, they aren't getting paid for. For example, in the 2000s, the average IPO would trade up 20% on the first day. 2020's biggest IPO thus far is Snowflake. Shares popped, get this, 112% in the first day of trading, translating to $3.8 billion straight to the favorite clients of the investment bank's pockets. Another reason a company might opt for a direct listing is that there's no lockup period preventing existing shareholders from selling stock. Founders can sell their stock immediately, as can investors. This allowed Palantir co-founders Peter Thiel and Alex Karp to unload over $400 million in Palantir stock within days after their direct listing. If it sounds like they're not that confident in the business they understand better than anyone, trust your instincts. So when Palantir founders say they're offering a direct listing to be a different type of tech company, what they're really saying is that they wanted to get their money out on day one. In the same way Thiel got cozy with Trump when he perceived him as a winner and then distanced himself from Trump when his poll numbers plummeted, he is now trying to create distance from the loser that Palantir will be if Biden wins. Under a Biden administration, Palantir will be exposed, not as the high-growth unicorn it pretends to be, but as the dog with fleas it is. Direct listings are not to be confused with SPACs. In a direct listing, a known company becomes publicly traded but raises no fresh capital. In a SPAC, investors put money into a blank check company, which the manager uses to buy a private company in the future. Essentially, a group of managers say, trust us, raise money, and then go hunting for a company. While the emergence of SPACs is providing some relief to investment banks, providing over $400 million in fees for Goldman, Citi, and Credit Suisse this year alone, Technology and capital markets are changing at a faster pace than investment banks can adapt. In September, the market capitalization of fintech startup Square exceeded that of Goldman Sachs, the 151-year-old investment bank. Just as the madmen of advertising were rendered useless by the math men of the Bay Area, the investment banks are being cut at the knees, turning the titans of Wall Street to the tallest midgets in the room. Prediction: as tech companies stay private longer and founders and VCs look for better ways to fling unicorn feces on investors or tourists to the unicorn zoo, expect more venture-backed firms to opt for direct listings. A loser, the media. Last week, Google announced a $1 billion commitment that will be used to build partnerships with news publishers and invest in the future of news. Well, guess what? That's a day late and a dollar short, and a weaponization of platforms and radicalization of young men and a perversion of our democracy and pornography for kids and X, Y, and Z. Google, give me a fucking break. Google has long insisted that it has no plans to own or create content. When you can get it for free, why would you actually be in the business of the hard work of creating content? Just like Uber became the biggest taxi company without actually owning a car, and Airbnb became the biggest hotel company without being in the business of real estate, Google became the world's biggest media company without producing or owning any content. Google has made billions from the work of news publishers for over a decade, raking in $4.7 billion in 2018 from running ads against third-party news content. That's right, they take other people's content and then have raked in almost $5 billion running ads against it. Meanwhile, it's the news publishers who take all the risks. They fund the news gathering, put journalists in harm's way, and then turn around and give their content to Google for free. Hi, I'm a newspaper. Let me shoot myself in the feet. Wait, that's a bad idea. Let me put the gun in my mouth. Google's abused its market position, but the media organizations let this happen to them. Over 1,800 newspapers have gone extinct since 2004 from the bad decision of trading revenues for eyeballs. So in love with the innovators, let's let them in. Let's be hip. Let's partner with Google. Partner? Are you crazy? In 2008, I joined the board of the New York Times. The reason I bring that up over and over is because I am rabidly insecure. The first recommendation I made, no joke, first board meeting, let's turn that shit off. Why? Because you don't see Modern Family let YouTube publish its best clips from the season before for free. And why don't they? Because they don't have their heads up their asses. Google, a company that made $135 billion in ad revenue in 2019 alone, pledging $1 billion to publishers, is similar to Tony Soprano leaving a donation at Chris Montesanti's wake. Oh my God, great TV reference. Sopranos, second best show of all time. What's number one? First word breaking, second word bad. You heard it here. That's right, Google. Google will soon have to answer to Congress for the anti-competitive behavior its business was built on. So this $1 billion is little more than proactive PR, like Pablo Escobar building parks while detonating bombs on commercial airliners. However, it's not too late. It's not too late. What should publishers do? The best content creators, the Murdochs, the Sulzbergers, the Newhouses, and others. Nikkei owns the FT, I believe now. But anyways, good people, love the FT, love that salmon bitch. Hello, everybody. I'm smart, I'm British, have sex with me. Boom! Anyways, the share of ad revenue Google generates from their ad content should be shut off. Governments and regulators are waking up from their slumbers and need to start taking action. The French government has already ordered Google to pay news organizations for their content, and the Australian government is trying to do the same. This is yet another reminder of what happens when we let monopolies run unregulated. It unfairly wreaks havoc, destroying entire industries and robbing the rest of the economy of oxygen, leaving the spoils for the chosen few. And by the way, taking away the guns and badges of what has been the most effective enforcement vehicle in the history of the West, the media and journalists who put fear and favor behind in the backseat and go after corruption. Google, you have damaged the world in a lot of ways. Fantastic to be a Google shareholder. It just fucking sucks to be anybody else. We're almost at the end of 2020. By the way, the past, future, and the present walk into a bar, and they're all tense. Anyways, a year where decades happen. We think that time is attached to celestial objects and it's static. It's not. Time accelerates and decelerates. What image will define this year? Which image captures the stupidity of this administration? Simple. Orange Hitler and the Rose Garden Massacre. As scientists tell us, super spreaders aren't people, they're events. In Seoul, one man walked into a bar and 1,900 people are tested and traced, and then the Korean government shuts down 2,000 bars. In the White House, there's an outbreak and there's no formal contact tracing. But statistically speaking, someone is likely going to die from that event. If someone had shown up with brown skin and a turban and shot someone dead in the Rose Garden, that would have been an event that would have triggered action. But over 20 people infected with a deadly disease after contact with the president has no action. What is wrong with us? We have an inability to perceive threats if they are not other people. We are losing people. The velocity of death here is greater than any crisis in history. And finally, in other news from the past week, we all learned where to turn for reliable information coming out of D.C. Claudia Conway.
Smack my ass like a drum.
Why does Claudia always travel in packs of 3? Because she can't even. I like that. You guys don't like that? That was the best we could do. Anyways, we'll see you next week.